All right. So somebody asked me to make a review on GBPUSD against the EURUSD pair. All right. Regarding the price action on Wednesday, the 3rd of May, 2023, which is yesterday's price action, right? And before anything else, let me just take you through the daily structure, right, of these two pairs and how I would have been looking at them. Well, this should have been here. It's a mistake on my side. Okay. All right. So yeah, if you look at GBPUSD, we had what? We had GBPUSD forming a low on the 25th of April and a higher low on the 2nd of May, right? Which was on a Tuesday. And looking at EURUSD, since we had a low and a higher low at GBPUSD, then we had a low on the 25th of April and a lower low on the 2nd of May 2023, which is on Tuesday. So there's my SMT, and if I'm looking at these two pairs, then already EU has shown what weakness, right? It's relatively weak as compared to GBP USD in terms of strength. Um, and the fact that I was trading USD JPY yesterday, which was on a Tuesday too, and I was expecting lower prices into a BC, then I would have been expecting what higher prices for these two pairs. And the question would arise to say which one would I have traded, and on what basis. And yeah, I've already given you the basis for why I would trade GBP USD, because I want to buy on strength. I want to buy on strength, and I'm trusting that the one that has shown a stronger hand or an upper hand in terms of making failing to make what lower loss, then that's the one that would likely rally above or rally towards my uh drawn liquidity on the buy side, right? So with that being said, um let's proceed. So we already dealt with Euro USD, and we identified what our SMT on it. So we're done with it. And right here we had what? We had our structure on the daily, this order block trading to this, the main threshold of this bullish order block, and then we proceeded to what? We have this order block trading into the main threshold, annotated and dotted black lines here, and then we form another order block. We trade into the main threshold once, twice here, forming the SMT with EU right here. And you can, if you look at the daily structure of EU, you would realize that it's still trading on the main threshold of a bullish order block too. But then again, the SMT that I mentioned here. So with that being said, I'll only be considering what? I'll only be considering the 4-hour candles to form what? The open, low, high close scenario, since I'm expecting what? Higher prices or a bullish day. So we have already identified our drawn liquidity. We have a failure swing here, which is a Monday high, and we have an old swing high right here, which is another source of buy side liquidity. So I'll be targeting this and that, and I'll be observing to see what had happened here. And I didn't annotate this one out because it was traded to prior to the AM session, the New York AM session, because I'm only interested in what's happening in the New York AM session. I'm trading a rule-based scenario. So without wasting any time, let me just bring up the rules here and right there, so we can go over them one more time. Rules. Why is it delaying? Rules. Okay, I don't know. Right, there we go. There we go. There we go. There we go. So we have our rules here. We identify what? Our drawn liquidity, and we have our drawn liquidity on the buy side right here. And since we have already identified a higher drawn liquidity, then we'll be having what? A bullish day. A bullish day, I expect what? An open, low, high, close scenario on the daily or the 4-hour candle. I'm only looking at the daily or the 4-hour for this particular scenario, right? You can use it on any other candle, but for me, it's very much convenient to be using on the daily and on the 4 hour. So after then, I would go to the lower time frames and observe what's happening, right? I would mark out the opening prices of whatever candle that I'm looking at. If it's the daily, then I'm looking at the opening price of the daily and observing what's happening on the lower time frames. And if it's the 4 hour, I'm looking at that 4 hour candle that is formed in the New York AM session, right? Or the New York kill zone for those who refer to it as the kill zone, since we're trading Forex here. So in this case, I'll be looking at the 4 hour candles that were formed in the New York AM session. So I want to see it trading into a level of support, and then it trades away from that level of support, which is displacement, your market structure shift, and then you see what a return to fair value gap. There's a whole scenario here. The return to fair value gap has to happen where on the New York session, New York AM session to be precise. So let me just put this aside and let's go straight to the 4 hour candle or time frame so we can look at the candles that were formed on the New York session. So we can get rid of the SMT here. We already covered it. Now, looking closely, you can realize that I annotated the 5 a.m. opening price for this candle, and the reason is because the 5 a.m. overlaps all the way to 9 a.m. of the New York AM session. So I'm looking at this, not looking for trades, but observing what's happening here, right? If it's already bullish, then I want to see it doing everything that I've already mentioned. And the same thing, I'm looking for trades on the 9 a.m. 9 a.m. candle that is being formed, right? So since we have these two levels, let's go to the 15-minute time frame now, and let's see if we can find any trades on the 15-minute time frame and or on the 5 minute time frame, because it's very much subjective, right? It's very subjective to how price is panning out. So without wasting any time, there's our 5 a.m. open. We see price trading lower into a level of support, trades past this BC, and then trades into this order block. Let me just annotate the order block right there. There's two consecutive candles. That's your order block. But in this case, I'll be looking at this as a rejection block, right? Because it just traded way past the main threshold and past the lower portion of the body of the order block. So I'll be looking at this here as a rejection block, and then we trade away from it. I'm not worried, right? I'm not worried with what's happening here, as long as it's trading into a discount array for support, right? And then we see price breaking. It doesn't break any structure here, but it rebalances what it rebalances this fair value gap. So already we see price forming what? Already we see price forming an intermediate term low. But right here, there's our opening price at 9 a.m. As you can see, there's 9 a.m. I'm not looking at 8:30, right? Where's 8:30? 8:30 would have been right here. I'll be looking at 9 a.m. on the candle open, the 4 hour candle open. So we see it trading higher, fails to break any structure here, right? So I'm not taking any trades right there. And then we see it trading into a level of support. That's okay with me. That's what I want to see. Let me just put the rules out one more time so you can understand. Put the rules out one more time. You want to have certain rules for engagement. You don't just want to trade for the sake of trading price action, retail minded. So right here, let me just put out the rules. So yeah, as you can see, I'm not skipping anything. Support level, we have it here, and then displacement higher, we had it right there. So once we displace above this, let me just mark out the displacement. I think my PC is over here. Load. So give it a moment. Give it a moment. Let's give it a moment. All right. So I think it's good now. All right, so that's our market structure shift right there, and I need to see what a return to fair value gap on the AM session. And where is our fair value gap here? Looking at this, I see what? I see a fair value gap right there. So right there's what? That's my silver bullet right there. Institutional order flow entry drill or the silver bullet, whatever you want to call it. Uh, there's my, and we have what? We have a breaker right here. We have a low and a high and a lower low. So this becomes a breaker right there. Price trades into it nicely and we trade higher. So that's your ICT unicorn model on the 15-minute time frame. So this is the trade that I could have taken, right? On GBPUSD. And where's my stop? My stop is on the intermediate term low, right? That's 18 pips and much of exposure. And I'm targeting what? Monday's high, which is 50 pips. And then eventually we trade to uh, the old swing high right there. Let me just old swing high, Monday high. So you can see them. That's 65 pips. And that would have been that with this trade. But for those who are not content with the 15-minute time frame, right? You can still go to the 5 minute time frame and expect to see the same thing panning out because I use the 15 and 5 minute time frame interchangeably depending on which price action is much clearer. You understand? So if you look at the 5 minute time frame, this is what the market did. The same thing on the 15. So we trade into a level of support after the 5 a.m. opening price, which is right there. Level of support we had before I annotate the market structure shift. Right there we had AM session stops, right? There's the London session stops, not the AM session, but the London session stops right there. London session high could have been targeted right there nicely. But okay, looking at it now, you realize that 9 a.m., right? Because I'm taking trades after 9 only, just because of the fact that the 4 hour candle that I'm observing is opening at 9 a.m. And regardless of the fact that, which is very much stubborn of me, we had what high impact news coming through. So this would have been your market structure shift when price broke what? Price broke this intermediate term high right there. This intermediate term high which traded into this CB, right? So you break it here, you'll have a fair value gap, or you can use that, which is much clearer, right? You could use that. At the end of the day, you see what you see, right? What I see is not what you'd actually be seeing at the point in time. You can be seeing this as a market structure shift, as this or that, right? That's your displacement. But I'm content with what? I'm content with using this candle because it's very much energetic and it's displacing above this high and it returned to order block, right? Not order block, but BC right there. That's your fair value gap and it's well within the time parameters as I had mentioned, and you can see how the candles stay uh within the fair value gap, right? So why would I be putting my stop here? We have an intermediate time low right there. You can look at it on your own right here. I'm trusting that not to be broken, and we already have what we have another breaker right here. Oh, it's not a breaker since we have this, so it's a mitigation block right there. So I'm trusting that if price wanna trade past this area into this, then it should hold on this mitigation block, and already we have a rebalanced intermediate term low right there. So this could have been your entry on the 5 minutes, which is still very much valid, right? And you have that as your target and eventually that. So this would have been my first TP and then second and third. And you can see how we trade all the way to it at 2 p.m. I think we had news releases at 2 p.m. and prior to that at 10 a.m. So that's basically that with this market, and I hope you understood. And if you look at the reason why I would have stayed away from EU is that, as you can see, it fails to take out its old high, its old swing high. If you look at the daily for GBPUSD, you'd realize that it trades above the old swing high. So here you would only be targeting what? You'd have been targeting a failure swing, a swing that was formed on Thursday, and then we had what we had this right here, which is what a week, right? And I would measure out the consequent encroachment for those who won't be looking at GBP, the consequent encroachment of this week, and eventually the upper quadrant of this week, which is 50% off from here all the way to the high, from the consequent encroachment all the way to the high, 50%, and then the upper level, that's your quadrant, and then those would have been my targets. And you can see it failed to take out that swing high. That's why I was uh, emphasizing the fact that GBPUSD had shown a lot of strength, right? So I hope you understood that part. And yeah, I'm not trading for the day. I'm not trading for the entire week no more. I'll be trading next week due to, I think, yeah, I think that'll be that.